record, so I will. And it reminded me to show this stupid screen. Sorry. Yeah, Eugene, I just signed an agreement with my local network expert here in town. He is a guy who runs a computer networking service for local businesses, and he has the contract to provide emergency internet services. I should say internet services for all of the emergency public service providers like fire and police and Homeland Security, and he's got a rock solid connection to the backbone internet with the fastest, most secure connection in town. So my intention is to start, I think, maybe doing like a once a month, that kind of weekend workshop. Maybe it's the 2 hours, maybe it's the 4 hours, something like that, and that we solve that problem of the lag time when we have a large group assembled like that. We want to do high efficiency knowledge transfer. So I took your advice to heart on that one, and get that squared away today. Let me see. Let's see. Yeah. Okay. So there we go. Arrow. Okay. Here we go. Now, so this is the nightly podcast for June 8th, 2020. And we closed out the week last week with a employment report that's really surprised, which gave us a big gap up and a pretty strong follow through and an excellent close. And the open question over the weekend was, what would the three piles of people do? One pile would say, oh, that was an overstatement and things aren't that good, and so this is an opportunity to get short and fade that large gap move. That's one, call that the smart money, the professional money. The second bucket of folks would be saying, oh man, we didn't get a hold of that because it was such a surprise intraday, and so we're going to load up the bus and move out on Monday as soon as we can, and trust that the long-term good news is going to carry on. The third group would kind of say, well, since both of those guys might be right, it might be a volatile day, and so we'll be prepared to trade it in whichever direction the short-term volatility takes us to make a little money, and then try to detect the emerging theme of the day as it looks towards future days. So that transition from intraday tactical trading towards longer term swing trading to take advantage of the dominant trend once the price action for the day is developing. So I tend to fall into that third bucket, which is why I went last with that, because that captures the essence of hybrid trading to begin with. It recognizes important ideas in the local context of different time frames, and then tries to craft a plan that takes into account all of that information, hopefully seamlessly, but hopefully in some integrated way that lets us respond with flexibility. So as I look at the evidence of the day, how would I judge that if I was one of those other two buckets of guys? I would say, well, it looks to me like the second group one, in which there was a minor gap up, which kind of surprised me. I thought there would have been a bigger gap and then have it fade, but the fact that it was a small gap says maybe the play really was to go long. I got to think about that. That if there was not a big gap when I expected one, maybe that's an indication that they're not going to try to fade it, that they want to just get in and let it run. So the first group would have failed today if they just shorted the opening and then we're going to hold it for a couple days, because those guys got smashed. The second group would have done well because they just bought at the open and are committed to holding this thing. until maybe using a 10% trailing stop, which would be, down here around the Bollinger Band mean, and said, hey, we're just going to bet that the long-term plan is up and we're willing to take a 10% trailing stop risk. And that's kind of what looks like the winning play out of those two groups. The third play, as we'll see when we look at the tactical screen, actually had an opportunity to make some money on the short side, and then 2 or 3 tactical opportunities with that supported spring crossing in its various forms to make some bank, and then make a decision to use some of that to hold for the swing trade. Because when we look at that mad minute in the last 30 minutes of the day, a really strong move, it looks like some people were taking large positions and ready to hold it overnight, and ready for some moves tomorrow. So that's the kind of day it was. This is the the high of the day and the low of the day. The RL10 perfect price, the end point of the RL10. First, we notice that is as steep up as it can be, because it dropped off a lower price and added a move to the upside. So it got steeper today than it was yesterday. But that coincides with the low of the day. So this is really all tactical momentum to the upside, and it's outside of Z2, halfway to Z3. The important thing is, that Z3 is a dynamic thing, so it's like price will always keep pushing that higher. The thing to compare it to was yesterday's Z3. So it closed at what would have been yesterday's Z3 line. So this was really a powerful move. And now this entire move can be seen as an extraordinary move because it's moved all the way to the edge of the Z3 boundary. And the low of the day is at the fair perfect price of the RL10 endpoint. And both of those are outside of the Z2 floodplain. And there's a widening gap between the baby dragon, which is the 3-period moving average of that RL10, and today's price action. So this is really kind of a strong vote up with a strong close. And that's the psychological narrative that I attribute to the guys who won today, that they're willing to hold on to that and go. And I want you to notice that, that 10-day look back period, so here's the 10, this is simultaneously the 10-day high, 30-day high, and the high of the day. And the 10-day low was 10 days ago. So this number is going to go up to here, a micro improvement. So that's actually going to be, with any kind of gains tomorrow, this RL10 is going to get even steeper as the bulls win. The slope of the dragon is pretty strong, up, as strong as it's been in the last 10 days. The RL30 extension is pointing up. The PSAR has been a steady guide and is still pointing north. And so with all of the price action out of the floodplain and north of those 3 projection lines, this is just exactly as strong as you could ever want to see for a bull market to be. We're well into the summer. And now this transition from fall into the summer is looking pretty good. And it just means that the potential for that kind of move was there. So you see the RL10 coded green, and that's telling us, the real price, the RL10 is strongly bull and in the summer. And this is the growing season. The peak RL270, the long-term fair value, this was the highest that the RL270 had ever gotten prior to the February shenanigans, the February fireworks. The current RL270 long-term fair value is still down here at about 299-ish. And so the move here from 325 down to 299, about an 8% off. So those guys are feeling like an 8% bruise. But the important thing to me is that this tactical recovery here, the shorter term traders have already worked it back up to what was the reasonable long-term fair value at 325. The Z3 excursion is here. And, I think it's like 339 or something. It was the all-time high, so we're starting to get within, you know, arm's reach of that. The uh, the price ladder on the way down is the low of the day at 320, Z2 line at 317, Baby Dragon about 316. The this noise boundary of the dragon to me is the real support level here, and it begins at 312. The spine of the dragon at about 310. The southern skin of the dragon at about 305. So that gives you about a $20 buffer in here, which is about 7 or 8%. So depending on how aggressive you want to be and how much room you want to give this to wiggle, somewhere, I think your reasonable choice as a swing trader would probably be, if you want to be aggressive with your stop, 312, 313, that gives it about 4%, and about a 6 or 7% if you're using the dragon bottom. The PSAR is still back here at 302. So this is one of those points to highlight about the PSAR. We talked about that this weekend as the PSAR is an effort to find some kind of reasonable trade-off between a time stop that accelerates, but which puts a limit on that acceleration so that you don't prematurely get out of these good moves. Well, when you have a consistent and accelerating growth here that is faster than the acceleration limit of the PSAR, you start seeing a wider and wider stop. And so under those conditions, when you get that almost parabolic feeling, I mean, look how the Z3 lines are expanding. So all of the volatility is in our favor to the upside. The parameters you choose in your PSAR for the long term at times might make you have too wide of a stop during this parabolic. And so this is where you might use your trader's judgment and say, you know what, the PSAR is pretty good most of the time, but in terms of the R capture I've already made, I may want to just use my judgment and accelerate, let's say, let's suppose I just picked the northern skin of the dragon. I said, you know what, I want to lock in this extra gain from 302 to 312. That's $10. That's a 3%. I might say, you know what, I'm going to just decide that 3% is mine. And so I might do something like this. Let me put this peg in and make that my exit until such time as the PSAR catches up. And when the PSAR overtakes the skin of the dragon, then I will revert back to the PSAR. So I'm using like a strike decision to just jump that stop to here. Now, what I might decide to do is each day, just use instead of jumping that up, I might just say, let me keep studying the skin of the dragon, that northern skin of the dragon, and just use that as my trailing stop and just kind of automatically move it. Or you might decide at the end of each day, I'm going to make a decision if I want to keep moving that up. So if you're a swing trader and you're in these abnormal times, you should probably spend more time figuring out what your stop strategy is going to be that would satisfy you, as opposed to trying to fine tune, maybe an entry or trying to come up with a master strategy. I think it's just better to adjust to that moment, make your decision, and live with it, and then move on to the next decision. The PSAR is pretty darn good most of the time, and where you want some extra attention is during abnormal gains. Well, this is one of those moments of abnormal gains. You look at the steepness of the RL10, you notice that the price has been outside of the floodplain now 2 days in a row. Back here in the earlier stages of this move, when it first broke out of this consolidation zone, we were about 3 weeks ago, or no, I'm sorry, right in here, like 3 weeks ago now. So this was last week, 2 weeks ago, 3 weeks ago. We had a very tight consolidation range, and the price at that time was inside the floodplain between Z1 and Z2. And that felt comfortable because it hadn't made a runaway move yet. You can see how the Z3 line's pinched. And then the market in the second week, 2 weeks ago, voted to the upside and followed through. And now price moved generally out of the floodplain, like Z1.5, and really started tracking the Z2 line. So that's like a half a standard deviation of improvement. Notice how the baby dragon is up here near the Z2 line, whereas here he was down near the Z1 line. So that sort of tells you how special this move may be, that you start getting some of those insights. We call this the market mosaic. And this, because we're talking about SPY here, this has given you actually a way to think about market classification if you are kind of a short-term swing trader or you're a hybrid trader. You start picking up some of these indications from these different indicators, and to give you an idea of what strategy you want. So I'm talking myself into using this skin of the dragon as my stop, at least for tomorrow. That would be the indication that any long, like if that got hit tomorrow, any long positions, I should probably be out of them based just on the market, because that would be the sound of the market cracking. And if you notice way back here, the size of the kind of the bearish moves, those 3 days there were twice the size, in some cases 3 times the size of these grinding upward moves. And what that tells you is that bearish selling days are not symmetrical with upward grinding bullish days. In fact, they feature short, sharp, decisive moves. Look at, in every one of these cases during this expanded volatility, the open was near either the very top or the very bottom of the daily move. And then you got large directional moves. Like this one featured a gap down, quick sell, and then a big move up. So it wasn't until we got back into normal grinding and upward movements on net that the volatility again began to compress, the daily ATR. So I take that as a sign that I'm to be cautiously optimistic about the bullish move, but to take special care that I'm satisfied with where I want to put my stops as I adjust them. Now, if this was not this abnormally large gain, like if it was back here in the when things were just kind of quietly grinding, I might have just gone ahead and said, you know what, the PSAR is pretty good. I'm protected by the noise barrier of the dragon, and that PSAR feels like a pretty good stop here. It's better than the Bollinger Band mean, but it still gives it the width of the dragon to be good. But by the time we get up here, that just feels like it's too far away. So rather than try to refine my parameters on the PSAR, which I like about 80% of the time as a good guide, I'm just going to keep that and just acknowledge that this was special, and the dragon is almost completely out of the river, whereas here he was already in the river. Now he's almost out of the river. That's how exceptional this is. So I'm just going to adapt to abnormal times by just deciding to move my stop up to here. What, are there other choices? Sure. I wouldn't be offended if you decided to use, the baby dragon or even the Z2 and say, hey, I'm going to let it stretch up here and fiddle around in the Z3 zone, but I'm going to lock in Z2. I wouldn't be offended by that. That gives you an extra $5 on 300, and that's another 1.5%. So whatever decision you decide, you've got to be satisfied psychologically and professionally that that was right for you. You don't have to justify that to anybody. You're the one that has to live and die with that. I had to take a little lozenge for my throat. I picked up a little sore throat from all that talking I did this weekend. What else can we see here? Well, you now notice that the RL270, the current RL270, which is at long-term fair value, you notice that it's kind of The slope was down and it bottomed out right about here. It's slowly starting to curl up. So even the longer term psychology is starting to feel like it's turning. That's just my inference. That's just how I make sense of that. Doesn't mean that it's true. But in terms of completing the mosaic, that's how I use that. And then I still feel like they have about that 8% bruise from the peak RL270 fair value and the current. But this one, again, strong vote up. Just kind of amazing. So let's take a look at what worked today, if we can. Let me go find SPY down here. Okay. So SPY was up 1.2%. What was better? Well, slightly better was lumber, Euro, Asia, Asia less Japan, Japan, consumer discretionary. We framed that one this weekend and said that had some real possibilities for gains. So it was marginally better than the S&P. So that may still look pretty good for those that were trading that one. This one is key for me. The diamonds, DIA was at 1.75 while the S&P was at 1.2. That's 0.5% better. So that is a decisive tip towards the large caps, the super large caps. And then the Russell was at 1.94, so marginally better than the Dow. So the aggressive traders in the Russell enjoyed the day, and then the ones who are committed to those long-term mega large caps, those large cap leaders, got paid today better than the market. So we would watch for the opportunity to follow through with some of those Dow 30 winners. That would be, note to self, take a look at some of those. And that would include names like, now I can look at Caterpillar was better than the Dow, McDonald's, U.S. Steel, Tesla was massive, Alcoa was brilliant, just ridiculously good. And then our buddy Devon Energy, 8%. Simon Property Group, another 7.8%. That's how smart I am. I would have been calling for that thing to collapse because of a belief I had about the vulnerability of mid-cap commercial real estate because of the lack of interest in businesses to get retail space and pay rent. But my new hypothesis is that maybe that's some of that Fed money that's finding its way into hedge funds that want to buy real estate property, commercial type on sale, and are trying to get ownership interest in Simon Property, and that's driving up the price, believing that ultimately that's going to pay off. So I don't know. All I know is it's going up, and I'm perfectly happy to be wrong in my macroeconomic analysis because I'm not any good at that, obviously. And as long as I'm trading it well, according to the rules, it's going up, so I keep buying it intraday and making bank on it. I'm happy with that. I'm happy to be wrong about my opinion and getting paid to be wrong, and then confessing it in public. That seems to be a pretty good trade. If that's the price of being able to trade it in that way, I'm happy to pay it. The more and more I study beliefs, the more I think I don't need that many. That the fewer beliefs I have, the better it is for the team. Well, what else was very good today? So we saw some of the Dow large caps. The VIX gave a hint of some volatility to the upside. So my hunch here is that even though the price was up today, that all those guys who were in category 1, who were thinking about fading this move up, just doubled down and started buying some volatility positions, and that drove up the price of the VIX, and you would see the short interest increase today precisely because the market went up, believing that 5, 10, or 20 days from now there's going to be some kind of correction. So we'll see if they're right. And that makes the argument, in my view, for this swing trading one day at a time approach, where you make a deliberate decision on how much overnight exposure to have and have that exposure paid for with markets money that you've already made and treated as a special category of risk capital, and that you're not exposing core capital um, uncritically, if I can say it that way. So that's how I am thinking about this phenomenon of VIX going up. What else was good? Real estate and clean energy continued its gains. McDonald's, silver, Mexico was strong. Energy was very strong at 4.5. So that's almost 4 times better than the S&P at 1.5. This was at 4.5. So I guess it's 3 times. Sorry. Twitter, that's a long-term keeper among the tech leaders. In the first place, they are reputationally excellent for the way that they're handling and supporting working from home and then giving back to the community. I think Jack Dorsey's got the moral high ground there, especially when you stand him next to Zuckerberg, that weasel. Unkind. Notice Brazil here at 5.6% is better than the triple Dow. So this is just a continued piece of evidence about why I think EWZ is worth your attention, because it trades intraday so beautifully, as we're going to see here in a few minutes, and it acts nicely on the follow-throughs for swing trades. So we framed that one extensively this weekend, and that trade frame, which we posted in the chat room and on Patreon, are well worth your attention if you're going to be a Brazil trader, either intraday or swing trading. We also framed, and that was pretty good. U.S. Steel dominated. Tesla was good. Alcoa was great. And then Simon Property and Devon Energy. Plenty of big winners in here from many different sectors, and which makes me feel happy about the way I've constructed the handful of symbols that I can look for my winning positions in. What was worse than the S&P? So the S&P was 1.2. I said, was it 1.5? So yeah, 1.2. So the gold miners not quite as strong. Merck, Home Depot, and healthcare, half the performance of the S&P. Some troublesome tech leaders were underperforming today. Cisco, Microsoft, Apple, Google, which were better than XLK, the tech sector, but they were worse than the S&P. So this was a day when the the energy and finance sector did well, and tech was lagging broadly. So that's a cautionary note going forward. So you could imagine how if the energy sector, which has been fairly cyclic, disappeared, there might not be any leadership to pull the market north. So I'm going to be prepared for turnaround Tuesday. With the market at these nosebleed levels, the possibility of short-term volatility spikes is going to be there, and I'm going to be ready with the hybrid frogs aggressively from the open and the collapsing dragons and the supported winter crossings, getting ready for that short-term adverse move that could be very troublesome to this bull market. What else was not as good today? Facebook, XLB, Nucor Steel, and that's sort of an interesting pair trade there. Nucor Steel barely in the green, while U.S. Steel and Alcoa were excellent. Walmart was a very special case of a symbol that lost, but it had gapped down large and then did nothing but go up and close very strongly. So that's going to be an interesting symbol to look at here. So that's a quick look at the symbols today. I guess I want to just go look at Walmart while it's still fresh in my mind. Walmart, this is the intraday chart. So Walmart's big gap down, if you will. It sold off sharply, and then just notice how painful that gap down was. That had the absolute low of the day was the open. And then moved sharply north almost a full percent in 1 minute, sold off all the way back down and a halfway up. So this is the argument for the OR5, the opening range 5, which says, you know what, those first 5 minutes are such craziness anyway. Maybe you want to wait and see before you implement those hybrid frogs. Or maybe you just want to say, you know what, that big red gap down creates the harsh winter that we love to see. And now look at the low in the RL10 and a higher low, and now this harsh winter turns into a spring, and you have a PSAR flip in here. What's that sounding like? You could take a shot here with the supported spring crossing. Now, in this case, when your stop is here at the PSAR, you're still in that position, but white knuckling it. And you would take a full execution loss. Now, if you had elected for the PSAR as your moving stop from here, you don't take as much, you get out a little bit sooner. And that's a real strong example of why that's a real decision. The automatic exit of the PSAR makes you pretty happy. Giving it that extra room to run, that's just an execution loss anyway. That's a minus 0.2 on a position size. So it's the difference between a minus 0.1 and a minus 0.2. But in either case, you prevent what could have been a disaster. We don't know. And now you're really happy with either one of those exits, because if you had this exit, then you're psychologically ready for the supported winter crossing either here or in here, and you've made back your 0.1 if you need to. And then from here on, Walmart does nothing but make you happy. So it turns out now that the support, I want you to really notice this one carefully, that you get a harsh winter, you get this breakout above, but you don't get the PSAR flip to over here. But by the time the PSAR flip happens, the RL10 is back inside the dragon. So technically, if you take a strategy approach to this and say, you know what, I want to have seen a harsh winter, that's a harsh winter, a failing spring, and then that's a harsh winter. It went from 120.7 down to 119.5. So I want to feel a harsh winter. I want to wait for the PSAR to flip. Then when the RL10 has crossed the dragon, I'm ready to buy it in here with a shotgun blast. So we had a long and extended discussion today in the chat room about why you might want a precise rendering of those rule sets, no ambiguity. So it must be harsh winter, then it must be a PSAR, then it must be the RLXD in the spring. But sometimes we saw today there were some moves where you didn't get precisely that move, and if you didn't have the precise rule set in a row and didn't take the trade, you missed an amazing move in the Dow. So sometimes the desire to have absolute precision might be some opportunity costs. At the same time, if you take a strategic view, a strategy approach, which says I can have a little bit of flexibility and judgment, it adds a little uncertainty, and until you get a comfortable level of confidence in that exit, it really makes it feel hard. So the intermediate space in there might be, look, I can take the rules in order 1, 2, 3 or 1, 3, 2, as long as I'm buying with all three conditions haven't been met. I wanted to have seen a harsh winter. I want the PSAR to have flipped. I want the MACD to be in the yellow spring. Then if price is moving up north of the river, Bang, buy it there. Now, that is sort of like halfway between a precise system and a flexible strategy. I'm not sure. I mean, I think I could actually code that so that it had all three of those criteria had to be met, and then it could just buy it by rule. But at this early stage in this emerging pattern, that is actually really an important set of insights. As I see, my job for you is to give you a robust strategy that's about 80% complete, which is where I believe that SFC is right now. That those three conditions, harsh winter, winter turns to spring, peace are flipped, RL has crossed the dragon, then you can buy it north of the dragon with a stop at the PSAR, and then leave that stop in place until the PSAR takes out your entry, then maybe adopt the Z1 or the Bollinger Band mean or whatever you feel is useful. That, I think, has enough precision to get you about 80% of the way to allow you to adapt those rules to your own personal psychology, your own personal skill level, your own personal insights, and you can find the way to make that adjust to fit. If I try to add 100% precision that fits one or two people, there's a almost certainty that that would not fit somebody else. And then I have to, so there's a point of diminishing returns where if I give you a strategy at 0.08 of a system, then that gives you enough room to adjust this to fit. And then we can trade this thing forward first with paper trading or one live share, and then compare our notes on these common targets in the chat room so that we can collectively explore what seems to really be working the best for most of us. And that gives you the ability to still adapt it and recognize the strategy element of it, and then get as much additional precision as you need to make it fit you. This is like 100% consistent with Dr. Tharp's insights from 40 years of psychological coaching that says to really make that system your own or that strategy your own, you must take ownership of it and adapt it to your needs, and then take accountable ownership of it so that you are responsible for your results. And that actually gives you the confidence and the freedom to adjust the rules to fit you. So I think my job is to use my strengths as a strategy maker or a strategy designer and a systems developer to give you a robust enough system, but with enough extra parts and pieces to allow you to adapt it and apply it to yourself, and give you a learning environment and an operational environment in which we can help each other find the best rules that work. So the way I advised David in the chat room today to carry this forward was to say, it doesn't cost you anything to go bar by bar on DIA and EWZ. Take each daily chart and apply each of those three rule sets that we talked about, and then look at the results of 10 days of trading on two symbols. And now you'll have enough information to decide personally if you want that precise rule set of 1, 2, 3 only, or 1, 3, 2 only, or a more relaxed adaptive rule set that uses either one, or maybe you have enough confidence in there and familiarity with it that you can trust your judgment to make the call based on other things you see. We're going to know after about 10 days of that how each of you might want to adapt that rule set for your use. And that would be the best possible use of that SSC, the Supported Spring Crossing Challenge Room, because the people that are posting in there should be posting charts that are strictly 1-minute bars and looking at DIA and EWZ. that would be the best possible use of that. And I'll try to comment on it as we go, but that's what I think gives us the best synergy for what we're about to do. So I want to just finish up by saying with Walmart, that's what that supported spring crossing looks like, and then it follows through, and it looks exactly the same as it did over here, which ended up being not so much, right? They all look the same leaving the station. So here's what that thing looks like at 9:45. I think this exits or this entry somewhere around in here feels correct. And now at a minimum, you could say, look, I could actually, you know what, after 10 bars, it rejected the Bollinger Band mean. I might just take that as a strike and say, you know what, I'm just going to scratch and wait for another day. Especially since Walmart had a big gap down and isn't following through while the rest of the market gapped up strong and is going well. That must mean that maybe Walmart's just getting crushed by Walmart sellers. So if it's not working, there's nothing wrong with a strike exit there. So that gives you one more thing to consider from a strategic point of view when it comes to adapting this rule set or this strategy, depending on whether you want it as a system or as a strategy. And that kind of illustrates the point that I try to make in words. Now, here's the point I want to make about experiential learning and trading forward in order to really learn what it means. David had listened carefully to me lecture about the difference between strategies and systems in a theoretical sense, but it wasn't until we actually got down to hands-on trading in context that the real distinction, I believe, came home to roost for him, and it helped clarify it to me why that was important, and it reinforced to me the importance of making that point in the chat room with a living example. And it's not until we both have skin in the game that I believe we did a better job communicating our 2 points of view. I spend the time on this now because you're going to experience that through the entire rest of your career as a trader, as you engage with systems that you design, strategies you may develop, and then you trying to incorporate the systems and strategies of others. You're going to encounter that need to trade off between precision and judgment and make it fit you in a way that satisfies you. That is a persistent challenge for as long as you're going to be a trader. And you've got to sort that out. Are you a rules-based trader, or are you a discretionary trader? Or are you somewhere in between where you are primarily rules-based with some discretion? That's where I believe I am, because my my systematic rule base has to do with the way I construct the daily trade frame, and that's ironclad rules. And then I allow myself some intraday judgment with some of these strategies. But when it comes to executing those swing trades and the high of the day and the low of the day and the mechanical entries, it's inside that yellow zone that I described in the hybrid workshop at great length. It's the discretion that I allow myself in that yellow zone is where I can express my discretionary nature. But once I'm in the green zone or the red zone, those systems take over about what I'm supposed to do, and then I can follow through without trying to use too much judgment. In my experience, it's not until you actually try to implement these things that you got to get on with it. And that's exactly the kind of detail that a computer-based backtesting, I believe, can't really give you, and that is what it's like to trade it forward with skin in the game, given the statistics of the backtest. And that's why I insist on forward trading things at very low levels of risk with skin in the game, so that I can experience the full emotional value of trading it live with skin in the game. Only then do I believe am I going to get the right information I need to know if that thing is going to fit me psychologically as a trader, and that's just because how my brain is wired. So I just believe that that's an important discussion for you to experience and to hear. Okay, so the last thing that I want to say about the Walmart case study that illustrates the living challenges of um, the supported spring crossing is eventually this one down here does pay off, and it pays off in a reasonable way. And even this one pays off quickly. This is what it looks like when it pays off quickly. You saw this this winter, it became spring. It got the PSAR flip. You bought it here because all those criteria are met. There's your stop. This time you're on the right side of the VWAP, and that thing pays off immediately. So you won't lose money on that trade. Compare that to how this one feels back here. And you may end up deciding, you know what? I might put a personal rule in that says if this doesn't pay off in 10 bars and it comes back all the way to my entry, I'm just going to scratch it. Because I now know that when it works, it should work right away. And then you might say, I'm going to make bank in here. So you never know exactly what that follow through is going to be. Are you going to try to segregate these rule sets by the time of day and then have 1,000 different rules that are precise but lose the flavor of what this thing can actually be? The real big payoff on this thing is don't lose money. Don't stick around. There's one that pays off big, and this last one pays off huge. So who knows when that's going to hit? I don't know. My job is to get my risk out of there and don't stick around long if it's not working. Because when it works, it should look like that last one at the end of the day. But let me show you what it should look like when it really works. Here was Alcoa today. When that thing works, it gives you a reasonable way to not lose money here. And then it allows you to get a 10R payoff in here with multiple positions. That's what it feels like when it really works. So if it's not feeling like that right away, you should never have confidence in it from the beginning. They all look the same leaving the station. Make it prove that it's working, and then be open to the possibility that the next one might be the one. Each one is just the next trade in 1,000 trades that you're going to take. And now feel the power of supported spring crossing, and now comes summer, fall, and then the supported fall crossing gets you right back in. And supported fall crossing, that's the big win. That's how you start stacking these patterns together in a chain. The reason I insist that you start off with just the supported spring crossing is so that you can isolate on a single pattern, feel how it feels, and from that you'll notice the trades you're not taking. And you may be able to quickly adapt to supported fall crossing and start picking up these things that you noticed but weren't allowed to take because of the strict rules. That's what a big payoff feels like. And that will pay for many, many, many execution R losses. That's about a 10R execution win, especially if you start stacking positions at the logical places like here, where it took out 2 previous humps and breaks above the emerging dragon. That's your logical second place, and you get paid a double scoop up in here. Or it also looks like this in Brazil. Where's my good Brazil? Come on, boys. This one, just go to the chat room and follow through the thread, the time-stamped thread that talked about this one. This one started off as a supported fall crossing and then scratched, and then collapsing dragon short got paid into a supported spring crossing, and then 4 positions that returned at least 10 execution R, a sideways quiet channel breakout, and then got paid again. And that was good. And then the diamonds, you should see in that room where the folks Depending on your interpretation, you may or may not have taken that one, but a relaxed approach to the strategy gets you paid here. You will learn later how to do the Z3 pinch breakouts and take that one. And then a supported spring crossing here gets you paid. So, in my view, the important way to approach this is to start strictly with one pattern, experience what it feels like to gain mastery and confidence with it, and notice the pieces that it doesn't get. And then, once you get confident with that, add these other patterns, and then you will become a chain trader and trust some judgment in here about how to move from one to the other throughout that daily structure. Now, to zoom in specifically, we're already an hour 15 minutes, so I'm not going to go bar by bar, but you can. You can go to TC2000, call that up by going back to that timestamp and then hitting the little bracket like I showed you this weekend, and you can advance this bar by bar and get as much stick time as you need to. And you can download my template there and compare your performance to my performance, not to so that you trade like me, but so that you can ask critical thinking questions of yourself and your peers and me as you adapt these rule sets to what fits for you. So I took this one as I saw that big gap up. I wanted to see the peak 10 and the peak 10 on the bottom, and so that felt like a yellow zone. And then spring, fall, but then the fall crossing, the PSAR flipped. I was ready to take a shot. It looked like this might be holding, and the PSAR was still underneath it. And if it could break out above this, it's off and running. So I said, I'll take that shot with a tight stop. And I gave it this much room. And it had 2 or 3 runs. We're almost an hour into the session. It didn't do it. And then it crossed the VWAP. So Z3 breakout short. By this time, I'm not going to lose money on that trade. So I don't care where you put, I don't care when you move that stop, but somewhere around here, I could be saying, let me use the PSAR. And by this time, if I just follow the PSAR, I've got no lose plus dinner for 2, right? Because my entry was here and my stop is now here just on the basis of the PSAR. And I'm testing it now at the RL270. That feels like a perfectly reasonable science project. And then how much can you get from this? I don't know. It depends on what it does. Here's what it did. So just to clarify, that was basically a scratch on a VWAP fail. Why? It started off as a supported fall crossing after a significant gap up opening. Comes back to the VWAP, holds where it should, supported fall crossing. I'll try it. Don't believe in it, ready to cut and run. If you exited here, I'm not offended. I was still trusting my stop. Let's just see. Scratch after an hour. Short. There's my stop. At this point, I jump it forward to here, pick up the PSAR right here. I see this move in this bar make a big run down. So I said, instead of just trailing it with the PSAR, let me just accelerate it to here, leave that in place until the PSAR picks up. But then I notice, oh crap, this thing was down here. I didn't say it exactly that way, but that's what I meant. I accelerated my stop to lock in each surge on the way down. And then I was using the PSAR as my general guide. But then this felt like a third leg down, and it didn't go further and gave me like a 1, 2, 3 doji. It's back towards the skin of the dragon. I said, you know what? That's just enough. Strike. So in the chat room, the guys were typing and said, hey, I noticed that Ken didn't use the PSAR stop, that something made him take that exit. Here's what made me take that exit. I saw the RL10 in the winter time acknowledged, but it rolled over. Come on. And it's locked in. You can see the RL10, even though it's still in the winter, a harsh winter, paralleling the Z3 lines, came back into like a 1, 2, 3. Now it's inside the floodplain. The dragon is caught up. It's not failing further. That's enough. I'll just get paid here instead of waiting it to come over here. And now I'm already stalking in the zero state for the harsh winter just reversed. It crossed the baby dragon. That means, what's the baby dragon mean? Guys from the workshop know. Guys listening to the nightly podcast know. The baby dragon means, hey, winter could shortly become spring, and that might have been an intermediate bottom, so check yourself. Now I notice the P1 happened in the next bar. So the RL10 crossed the RL30 outside the river. That's a P1. That's already the first two criteria of the owl. Unambiguous move, P1. The next thing for the owl, the third criteria, is the RL10 has got to cross the dragon. It's very close. The next bar, it'll probably be criteria 3. Now you notice this isn't the SSC yet, because the winter has not yet turned to spring. But I bet you it's pretty close. That's what the baby dragon says. The PSAR hasn't flipped, but I bet you that's pretty close. So if this strike didn't get you out, you got to get out by here. And the PSAR would have gotten you out anyway. So that's not bad. That's only a difference of about 7 or 8 cents. Hey, 7 or 8 cents is one execution R. That's a 0.2. I'm fighting for pieces. So I don't stick around long. If it's failing to fail, that's enough. Get paid. And now the gain is from 32.20 down to 31.89. That's 30 cents on an 8-cent risk. Hey, that's almost 4 execution R. I'd rather have 4 execution R in hand than 3 execution R in hand, because now I can clear the deck, and now I'm in the zero state, ready to, I have no position on, and now I'm getting ready to either do a supported spring crossing or a collapsing dragon short. So that point, that strike exit allows me to get right back into the zero state, get paid, get that out of my head, and get ready for the next trade. That's the technique I use to get into the zero state. Get paid, get clear, get ready, both directions. I don't mean to be shouting if I'm shouting, but I love this stuff, man. Oh, and then here's what happened. Right after that, let's take a look at this entry in here. We got the harsh winter. Winter became spring in this bar. PSAR flipped. RL10 cross it. Buy it with that shotgun. I don't care where inside that big fat yellow blob, green blob you buy it. I don't care if you bought it anywhere in there. At some point, the extra effort you spend on precision should be spent on just get in and then get ready to get out. And if it moves that far in your favor, move your stop to here, and now you got no risk left. You're only going to make money from here. So trade the effort on precision for get in and get your risk out, and make that a strike decision. You practice that 20 times, and you're going to automatically, I believe, have the right trade-off for you, and then you can convert your preferred practice to a rule after you've tried it and you feel comfortable with what your decision making is. Then turn that confidence into a rule. Then you can relax and let the rule fire, knowing that you tested it to your own satisfaction. And after 20 iterations of that trade, you're going to know what fits you. And that'll be more important for you than anything I might say. Just get in there, get your feet wet, sort it out, then turn that preferred practice into your rule. So here's what happened after the 0.8 win was we get this one here. So that move on the left-hand side was 0.8. And now this one, we get this in. Now, as this is moving up the stack, hooray, we cross the Bollinger Band mean, hooray, across the VWAP, hooray, across the RL90. It's crossing the highest VWAP here. Now we put this in here and said, look at the RL10 or the Dragon rollover and the RL10 rollover. As this is coming into the station, this is like a 2-hour battle drill in my mind. By the time it's testing that, I'm either going to exit right about here, or if it gets here, I'm putting that second position in. So I'm giving it that much wiggle room. And look how much wiggle room that is. Not much. It's like that much room. That's half of what my first execution risk is. So that's the essence of the 2-hour battle drill. It's like, hey, trade, fish or cut bait. Either get me out of this or blast through that resistance so I can get a second position on. Take your pick. What's it going to be? Oh, it voted to the upside. So now my additional risk is kind of like this. By the time that thing moves to here and is mucking around, I can say, dude, I'm putting my execution risk right here. And then as soon as the PSAR picks up, now I'm back to the PSAR stop. So this is a technique where I use that strike management to jump the stop from like here up to here until such time as the PSAR trucking along like he always does can be good. And now I can draw that line and project and say, as long as this thing is kind of north of that, I'll take the PSAR, or maybe I just say, let me relax and take the Bollinger Band mean and just use the PSAR as a guide. I don't care. Do whatever it's going to do. And then what it does is it does nothing but continue to go until I get 4 positions in, well above that entire well above this entire area of resistance and mucking around. It's well above that Z3 and this Z3 excursion. It got above this Z3 excursion. That was the reason to get the 4th one in. But when it got up into here, it moved up beyond the floodplain, closed poorly in a 1, 2, 3, and I did not want to let the 4th position go negative. I just said, take it, and then 2 minutes later, crack, and it would have been all the way down to the PSAR. Now, if I don't get that 4th position in, like if I just have 3, I probably don't mind that PSAR because I'm still in the money on the 3rd one. But because I'm a greedy little chimp and I got this last piece in, now suddenly I got to accelerate and strike only because I got so much exposure. And I'm not entitled to keep that unless I'm just aggressive about my stops. I just get that. Yeah, so that was the 2nd position. Then at the end of this is a science project, and I'm not going to lose money on that 4th position either. So that's what that feels like. If you go into the chat room, this is a snapshot of us having exactly this discussion live in that trading, while those issues are front and center with what we're trying to do. And this is what that discussion looks like as we're trying to work it out real time and have while the information is fresh, and this is talking about the language is, strategy versus systems and discussion rules. That's why the chat room is so darn useful, because it's a capture of what we said and when we said it while it was happening, so that I don't suffer from bad memory later on and wishful thinking. So this one was the Alcoa. While that was going on, and we were debating over the precise rule sequences at 1, 2, 3 or 1, 3, 2 or whatever that is, that whole discussion. In the time frame that happened, the Alcoa sideways or supported spring crossing, I tried it, said screw it, scratch it, and the PSAR stop would have been fine. And then it went back into the winter, became spring, the PSAR was flipping, it was moving, tried it again, the same reason I tried it here, tried it again. It didn't even make a new low. If you look closely, it was a higher low, and that made me even more want to own this thing. So my shotgun blast, by the time it gets to here, I've now jumped my stop to here, no lose plus dinner for 2, leave it in place until the Z-1, which feels like nice and relaxed. On companies, on an ETF index, I might like the Z0. On the companies, I kind of like the Z-1. That's what Gerald was finding too, who's making beautiful charts on this technique in the chat room, and he's already, I believe, mastered it, and adding to his repertoire a smaller hybrid frog box for his MMRB, and adopting a collapsing dragon and a supported fall crossing. He's showing you how fast you can start adding these new patterns. It's measured in days, not months. So if you're one step at a time, you'll get up to speed pretty quick if you do the work. So we are really liking this Z-1 because it gives you this kind of adaptive pattern, and that lets you get a second position in, a third position in. The third position came from, it took out the previous hump of the dragon, and it was getting ready to take out the Z3 excursion, so I split the difference and said, hey, that's good enough, and that paid off. And by this time, I've locked in this gain, and now the third position is good to go. So I'm willing to give it that much room. And by this time, I've locked in a move from 1243 to 1285, 42 cents on 7 cents of risk. The first position is 6 execution R. That makes this one probably 2, and this one probably 1. So I will round that off and say that's what 10 execution R looks like. And if you were following along in the workshop, 10 execution R is 2 position sizing R. And my daily goal is 2 position sizing R, but my weekly goal is to net 2 position R. So on that one trade, I've made my weekly goal on one trade that morning, and that pays for next week's or this week's goal. And all the rest of it, I just keep paying forward into the kitty. As long as I pay attention to my craft and make bricks, I can start paying forward and building up some protective fat for the lean years. And that way I don't lose sight of my job, which is to use the standard template, standard position size all week, and just worry about making bricks and bricks and bricks. I'll count them up at the end of the week and see what happened. I don't even worry about that. I am only worried about doing my job, making my little bricks as I can, 0.2 at a time, trying to get 2 or 3 positions in if I can, and I don't worry about the ones I don't get, because there were many easier trades than this in my usual suspects that I missed, only because I saw these first and it was good enough to go. It got my attention like a little chimpanzee. Off I went, got focused, and then I just took care of business. That's what it's like to trade in that style, and the psychological accommodations I have to make in order to maintain my sanity, such as it is. So those are the trade charts that I would like you to look at. Here, I think this one was an example of one that got away. XOP, I've been pumping this one hard. Look at this. The other ones were hard compared to this one. Here's a supported fall crossing, a nice spring move, find support, supported fall crossing. You won't lose money. You want a collapsing dragon? Okay, take one. You want a supported spring crossing? There it is. There's another one. And then an easy run all the day. It's not easy. Nothing's easy. But there it is. So that's what I want to say about that. I'm just gonna stop it there and say, take a look at the chat room, work your way through some of that dialogue. Oh, I just got to show you Gerald's charts. I mean, man, I'm gonna say that kid. That's not fair. That man is a craftsman. This was, I want to say this was Betty's. So Betty is a charming lady. I came to the workshop, did some of the prep work, and she joined what she felt was late. So she did as much of the prep work as she could. She was paying attention during the weekend. She traded it forward today. She had originally reported that her work got 13R, and then she says, "Oh, I did the math wrong. It was only 11R." And I said, "Well, I thought it was a good trade until you told me it was only 11R. So try to do better next time." I was teasing her. I hope she knows that's teasing. But she's getting on with it and getting her hands on it. So this is what good practice looks like. And you can see, the pinch, the breakdown paid, the SSC entry paid, adding one, cashing beautifully with a relaxed stop and then an accelerated stop here instead of waiting for the Bollinger Band mean, a good strike, and then noticing the pinches framing. So he's already back into the zero state. This was David and I working through some issues where, hey, sometimes the winter happens, the crossing happens in the winter, and the PSAR happens before the spring. So if you go by strictly 1, 2, 3, you wouldn't take that trade because you're waiting to see spring and then the PSAR flip, or whichever way. And in my view, the relaxed approach, which says, as long as you have a harsh winter and the PSAR has flipped and the RL10 has crossed the dragon and it's spring, you can buy it in this area. That's more of a strategy approach, which doesn't require as much sequential logic, but that's more complex unless you write it with code in such a way that it gives you that. I think Danny's got it coded in TC2000 where when the rules fire, it turns green, and when all three have fired, regardless of sequence, it gives you a ding. Don't quote me on that, but that's the way I believe it should be traded. And then you don't have the opportunity cost of saying, "Oh man, I didn't take that trade," and then feel regret. We're just in the study phase of this thing and learning how it works, and prototype and limited production. I'm trading it regular production because I'm 62 and I just don't care. I just want to get it and go and take the risk. Now, this is what I want to show you and show off about Gerald's work. I mean, that dude makes some beautiful charts. I hope he's in here and feels shy and embarrassed about being spotlighted, but doggone it, beautiful. He's using a minimum manageable risk box now of 0.5 frog box instead of 0.7, and he's using that as a bracket, so it's even tighter. And so he takes the Z3 pinch breakout with a stop at the VWAP instead of all the way up at the PSAR. That's good practice. And now he moves to no lose plus dinner for two, uses the edge of the dragon, gets paid, stop and reverse. This is like an owl slash SSC. At some point, you would say maybe the SSC is here, but sooner or later, it's the owl. Oh, here's the other point I made with David. You might have a precise system on the SSC and not take it, and you might have a precise system on the owl which picks it up for you just in case the SSC doesn't. You could now pair two precise systems and get the added confidence and precision of two systems, and then, but now you got to master two systems, so you can add that in there. But I want you to just notice that those things are all part of that chain trading sequence of SSC, then owl, and then notice your final one would have been an emerging dragon, but you wouldn't get that till way up here. But those are the logical steps in that sequence. And he's put the training and trading insights in here and what he was doing with the supported fall crossing and the owl. And he's noticed that the feeling of those is very similar to the owl. And he's now got enough confidence and practice that he can increase his span of control. And it went from 1 to 2. And he said, finally, meaning he's been suffering with that. But if you can increase your span of control from 1 to 2 in only 2 weeks, he's up to 3 now. And he's happy with the progress, one step at a time. And then his observation that the Z1 trailing stop feels really good. And that would be this stop in here. And that's feeling pretty good. So it's working well. And he decided to strike, I believe, here, because it wasn't going anywhere. It was 10 bars and nothing. Strike. Take it. Why not? Another zoomed in and beautiful trade. I'll let you read the annotations. This is one where I think the probably the Z2 stop allowed you to get all of that. This, I think, was Betty's trade for 11R. Here's another one where in DIA, Gerald's working through the sequences of the owl 1.6, 3.8 in Brazil with he tried it short in reverse and then collapsing dragon or Z3 covered and then smashed it on just one position. That was the same one where I was, because I'm a maniac and I've traded this a few thousand times more. He's still getting 4R out of that and the possibilities for more. Once he gets confident with that, I'll be coaching him through the idea about under what conditions could you add that second one. I'm pleased to see that he took the strike exit about where I did. Well done. That's some good trade execution there. Could you make a living on that with a couple weeks or months worth of practice? I think you could. I think you could. Oh, and we've already seen some of those. So that's what I want to cover tonight. I got to get the daily trade finally printed and posted, but that's what I want to cover. I'm expecting another volatile day tomorrow simply because it was so good and powerful to the upside. I think the short guys are going to come in and try to smash it even harder because they're suffering. So expect volatility tomorrow. And that's everything I want to cover. Take good care. We'll see you in the chat room. Do the work. Carry the load. Frame the trade, then trade the frame. Document your insights. Get better each day in every way. Trust each other. Share your notes. Let's go crush this tomorrow. Take good care, guys.